South Africa is working on ways to mitigate job losses caused by steep U.S. tariffs and is considering exempting exporters from some competition rules to support them. That's according to a joint statement from the trade and foreign ministers. SA faces a 30% tariff on its exports to the U.S. starting this week. The move is expected to cost tens of thousands of jobs. Measures to cushion the impact of job losses could involve the Unemployment Insurance Fund, and a block exemption from competition rules is being developed to enable collaboration and coordination by competitors. Mpact has reported a weaker financial performance for the 6 months to end June. The paper and plastics packaging group has posted a 27% drop in headline earnings per share. That's as South Africa's weak economic growth and business confidence weighed. And this resulted in lower sales volumes at the group's plastics segment. Looking ahead, Mpact is hopeful that its plastics unit will recover in the coming months, as profitability has historically been heavily weighted towards the second half of the year. But the group has cautioned that a significant uplift in the SA economy is unlikely. And that, coupled with the challenging global backdrop, is likely to produce a difficult second half for the company. MultiChoice has announced its plans to restructure the shareholding in its main South African operations. This will facilitate the group's sale to Canal Plus. The shareholding complies with local legislation that prevents a foreign company from holding more than 20% of the voting rights in an SA licensed broadcaster. To achieve this, MultiChoice's division that deals with the contracts for South African subscribers will become an independent entity and will be majority owned and controlled by historically disadvantaged persons. As a result, MultiChoice SA will effectively have a range of new investors, including Phuthuma Nathi Investments and 13th Avenue Investments. Prime Capital has formally launched its voluntary offer to acquire the MAS shares it does not already own. The offer is priced at €1.40 per share. That's about 29 Rand, which is a 28% premium to MAS's current share price. The offer is backed by €230 million in secured funding. Prime Capital says the offer is not conditional on gaining control of MAS, but only on requiring a 10% shareholder acceptance of the cash component. This comes after Hyprop terminated its own offer, citing the MAS board's refusal to provide access to joint venture agreements that cover nearly half the group's net assets. Shopright is looking to dispose of its Malawian business to domestic players. Africa's largest food retailer first invested in the country 25 years ago and now plans to sell its assets there to the Carson Investment Trust. The value of the transaction is not yet known. Shopright owns 5 stores in Malawi, and its exit supports the group's strategy to focus on South Africa. In recent years, Shopright has left territories such as Uganda, Kenya, Madagascar, and the Democratic Republic of Congo. In international news, Berkshire Hathaway, led by Warren Buffett, reported a $3.76 billion write-down on its Kraft Heinz stake in the second quarter, indicating the investment hasn't performed as expected. Here's more detail in this report.
Warren Buffett's Berkshire Hathaway said it took a more than $3.7 billion write-down on its stake in Kraft Heinz in the second quarter, an acknowledgement that the decade-old investment hasn't worked out. The write-down followed the struggling food company's announcement that it would consider strategic alternatives, which could include a breakup. It's Berkshire's second write-down for Kraft Heinz, following a $3 billion hit in 2019. Buffett acknowledged at the time that Berkshire overpaid in the 2015 merger of Kraft Foods and H.J. Heinz, one of his biggest investment missteps. Kraft Heinz has suffered as more shoppers favor healthier and private label alternatives. Its approximately 200 brands include Oscar Mayer, Kool-Aid, Velveeta, and Jell-O. Berkshire also reported a 4% decline in quarterly operating profit as insurance underwriting premiums fell. The conglomerate signaled it remains cautious about market valuations amid uncertainty about tariffs and growth in the broader economy. Shares of Berkshire have fallen more than 12% and lagged the S&P 500 by about 22 percentage points since Buffett, who's almost 95, announced in May that he would step down as CEO at year's end. Vice Chairman Greg Abel will succeed him, though Buffett will remain chairman.